All right, so we're looking at the British pound US dollar. I'm on a 15-minute chart, and I want to emphasize why sentiment is very, very important. And it can help us if we really hone in and treat this as a true strategy and don't deviate from it. You got to understand liquidity is the name of the game. And with liquidity, that means that someone is providing the necessary liquidity for exits or entries in the market. All right, and so let's go and let's look at forex client sentiment up here, and we'll clearly see that we were on the British pound, all right, U.S. dollar. Now, what do you notice? 71% were long, and only 29%. All right, well now 28. 72% long, 28% short. Right. So that's something we want to take a look at, which means that the liquidity is that we have people who are buying. All right. So if we have enough people buying, that means that we can sell a lot of something because we got a lot of people at the table that's wanting to buy, right? So let's go back, look at the chart. So 70%, 72% are long. That means that all this downtrend, all right, represents that a bigger entity actually wants to sell this market. They don't want to buy it. They want you, the retail, to buy it because the more you come into the market, the more you give them what? An exit. An exit point, right? You're providing liquidity for them. They want to get out. They want to sell this market. They're not ready to buy this market, but they want to push this low enough. Let's go on a higher time frame. Let's maybe go to the daily. We're on a daily chart. All right, we'll take some of these things off. So we're on a daily. Okay, we clearly see we came back where we're back here in some type of supply zone, right? Because look right here, price dropped here back in April, and this is April of 2022. So we see that by July of 2023, we have come back into this zone. Now, because we're back in the zone, we can expect selling pressure, which we got, and we see that now price is pushing back down. Now we have some what? We have some areas on the chart that are clearly setting up to be some potential demand zones as well too. So if these levels can hold, there's a possibility that we could see the price will continue to break this level and push up higher. And that to me would be good because we don't want the US dollar to be too strong because that means that probably the equities and crypto would get ate up as well too. But we really want to see the British pound really gain some strength back and the USD become weak on all asset classes. But for right now, it's good. And if the USD is strong, that's a good sign that you have opportunity to accumulate some other assets that's probably going to go on discount. And look, we don't know what's all about to happen with the economy. We could have a black swan event. We could push lower. If we pull up these fibs, look, man, we haven't even. Um, so we could fight to get back over this 23%. You can't see it because it's blocking. So let's just move this over so you can see it. All right, we got this 23% level. We may try to fight to get back above here, but on this trajectory, this is a key level holding around at 50%. So we want to keep an eye on that one. But at the same time, we definitely want to keep an eye for prices coming back down into these areas down here. Okay. So if that were to happen, that like I said, that would be good. That means that something is scaring investors into getting into the dollar for the most part. But yeah, so I hadn't really done a big macro analysis on this to see how we're looking and whether or not, and it looks like we could be, ready for a potential massive push back up here to these zones. But y'all gotta understand, we're on a daily chart, so all these are just these are years playing out. I mean, this high back here, you're talking about 2014. So you gotta think of the macro level. But once again, with sentiment, you see you had 72% that were long, 28% short. We could play on this, guys. So one of the things I tell people to do, and what I started doing recently, is label on the chart, your sentiment. So you say as of 9/26/23, and you could do at. And let's go look at the time. Let's take it's 12:43 at 12:43 p.m. 72% long, and what was it? 28% short. Now, why do we do this? We label this on the chart because we want to see how over time. So later on today or tomorrow, we want to do this so you have multiple dates on your chart and you can look at the sentiment and you can know, hey, yesterday it was at 72%. Today it's at maybe 68%. So you can start monitoring that, and what'll happen is you may start to be able to in, anticipate when a trend reversal is starting to occur. So if the longs start to get reduced and the shorts are starting to get increased, you know that liquidity now is flowing to the short side. So that means that if somebody um, wants to buy, they need you to sell. You're the liquidity. So we need majority of you to sell in order for us to buy. You gotta understand this market is based off of biggest players in the world. It's not based on you. So you have to follow the footprints of the biggest players. Okay. Their orders are so massive, it's going to take them time to accumulate it over, a long period of time. Okay. Let's go back and let's look at uh, another one. All right, let's look at the Australian US dollar. All right. 75% were long again, and then you got 25% were short. So let's do odd USD. All right, and we're still on the daily right now, but I'm about to go down to a lower time frame, and which is good because then we can create a zone based off of that, and we want to see how price breaks and retest that particular zone. Okay? Now we know that from last Wednesday, I believe, yeah, September 20th. All right, we've been in a downtrend. Okay, so we're making our lower lows and lower highs. So we get down here, we haven't made a lower low from this point yet, but that's something we're gonna look at now. From here, we've already dropped to where we currently are right now. That's 104 pips, so it's not bad. However, what we would need to understand is what was the sentiment on last Wednesday. That's why we need to what? We need to put our notes on the chart. Because if we knew last week, we could have had a note right here, all right, and now we can monitor and we can see, how that particular sentiment is playing out and whether or not we catch a trend or not. So we do know for right now, as of 9/26/23 at 12:46 p.m., 75% long, 25% short. Okay. All right. So we can have that on our chart. And then, like I said, on the 27th, I might have another note. Now, if it starts to get a little too cluttered, just put it up here. And you can put your notes up here. Also, you can update this. So if instead of having a whole bunch of notes, you can just double click on it. All right. Space down. And I can put as of 9/27/23, blah, blah, blah. Boom. All right. So it'll run down. Now, if you start to run out of real estate, then yes, then you can, create another one as well. But you can have these notes on your chart. So when you come in to check the chart, you just got a reference point. You don't have to keep flipping back and forth, to the Forex client sentiment. All right. So this is a contrarian site. It's for contrarian investors. That's what I am, a contrarian investor, and that's what I try to teach people to become. Right? We don't follow the masses. Right? We study the masses, but we don't follow them. We follow the minority, the minorities of everything for the most part makes the most money. Okay. Remember, when you win the lottery, you are a minority that won the lottery. Majority of those who played it failed. They are liquidity. Okay, that's how you have to look at it. Let's look at one more when we go on about our business. Maybe let's look at a indices. All right, so all right, let's look at the US 30. All right, and well no, let's look at SPX. So the S&P 500. All right, we had 55% that are short and 45% long. Now, did these give signals as well too? So you see, it says mixed. I don't really go off those signals, but I did notice that sometimes if it's mixed, it may go with the majority. So you have to study the asset that you're trading to see that. But I've noticed that a lot. If it says it's mixed, it normally actually goes with the majority. And we may look at another mix one to see. All right. So S&P 500. So we may just do SPY because most people trade this instead. All right, and what did we say? 55% was short and 45% were long. Right now, remember I said the mixed because it's mixed. The majority is winning right now. You see, it's dropping. So since last Thursday, we've been in the downtrend. Right. So that's the little hack. I keep telling you, right? Sometimes when it's close like this, all right, it's not enough to sway. Okay. So this 55% for you, that's really, really, really close. Right. Now, but let's go. That's why we got to put notes on here too. We need to see what's happening. So let's go to higher time frame. All right. I'm going back looking at some old strategies I have. I think I have identified that with the SPY, like the first of the month or the last Friday of the month, you have a lot of selling pressure, and I think that's just what it is that you see on here. So, but yeah, get back on track. All right, so you see the sentiment playing out here, but it's not enough to sway it. It's not what we call a huge imbalance. Let's look at another one. Let's look at one of these other ones. Let's look at the France 40. Even though we don't trade these, but it should still. It's an index over there. All right. And what did we saw a mix, right? So 58% were long and 42 short. And once again, we need to see if this is based off just the daily. Okay. What all right, we got a nice little pin bar forming. So let's go on a lower time frame. So let's see. All right. So since this morning, we had a nice little rally, pull back. All right, we're trying to press up. So 58% long, 42 short, but it says it's mixed because the reason why it's mixed, one is not overly dominating the other, right? So it's not like down here U.S. oil, 60% short, 40% long. And we're going to look at U.S. oil as well too. All right, so you see if it's mixed, the longs may win out on this one. All right, however, you have to do what? You have to mark off your charts because you see this downtrend. All right. If um, if 58% was still in effect for a couple of days ago, then you can see why the 42% or the shorts might have been winning on that. All right. So that's why I tell you we got to mark it off because a couple of days ago um, this could have been higher. This could have been at 70%. We don't know, right? All right. Look at U.S. oil. And so U.S. oil, 66% short up here, and then 34% long. So U.S. oil, crude, 66% short. So why are we going bullish, right? All right. They're getting the bears are getting crushed. You are liquidity, all right? So look, it's already moved 247 something points, right? So that's pretty good, right? So pay attention to the sentiment and you can learn. You basically are seeing where all the orders are at, right? Where do people feel about this? And if a lot of people are willing to sell, that means you have the opportunity to what? Buy. That's a lot of orders that they can get filled. Because why? You're the biggest players in the world. They need as much liquidity as possible. And retail provides that. As a retail investor, your whole existence is to be food or bait for something that's bigger than you. And if you can understand that concept, you will never become the food or bait ever again. You would feast with the sharks, the whales of these markets. So yeah, hit the like button, subscribe, um, leave any comments, ask questions. No more self-sabotaging. Just get in, study this, and you may find something that nobody else knows about. And that's what you want. Become intimate. You may see the market totally different. But y'all enjoy the rest of your day. Trade safe. Use a plan. Get out of your emotions. And just know, be committed for life. Okay? It's not one of these things we're trying to get in here, make as much money, and just try to run and disappear. I mean, that may be a goal for some of y'all, but if you commit to this, that you're going to be a student of this for life, it'll treat you very well. All right. Once again, it's your boy E White. I'm out. Have a great one.